Today we are going to talk about one stock which is a consistent compounder over the years, and the stock is nothing but Varun Beverages. And this is the stock which has given a consistent return, and many of the investors earned a lot. Now, some of the investors, like Rajkumar Sharma, Mohan Pasle has asked a question: What is the future of Varun Beverages here from here? Yeah, guys, Varun Beverages in last few years has given a great return to everyone. Now let us talk in detail whether the Varun Beverages will able to give this type of consistent return over next few years or not. So welcome you guys. My name is Tapan Doshi. Welcome to my YouTube channel. If you are not subscribed to my channel, please click the below link and do subscribe. And if you have any question related to stock and or any sector, do put it in the comment box. Now let us start talking about Varun Beverages. First, let us understand how Varun Beverages has performed over the years and what is the background and everything. So talking about Varun Beverages, guys, if you see that is a franchisee model overall, and if you talk about that, if you see Varun Beverages in last few years has given a consistent return. You can see it's like a 45-degree angle. Okay. And over the years, it has given a great return. You can see a perfect chart, a perfect 45-degree angle. Now, this Varun Beverages, what is it actually it is doing? See, if you talk about Varun Beverages in detail, if we then Varun Beverages is being there and associated with PepsiCo as a franchisee of PepsiCo from 1990, one of the key player. And again, it is one of the largest franchisee of Pepsi company across the globe. Okay, that produces carbonated soft drinks, non-carbonated drinks, and packaged water and everything. It's a part of RJ Corporations. Again, VBL presence is there across countries. So we'll talk about that in detail. So what I'll do, let me open the presentation so you'll able to understand much more in detail. So talking about Varun Beverages, guys, you see it is a key player in the beverage industry. Operation is across 6 countries, three in Indian subcontinent, India, Sri Lanka, and Nepal. Contributes almost 83% of his revenue. Three in Africa, Morocco, Zambia, and Zimbabwe contribute 70% of the total sales. Over 32 years of strategic association with PepsiCo, accounting for 90% plus of PepsiCo beverage sales volume in 27 state and 7 UT in Indian territory. So you can see the major uh, this company is a PepsiCo franchise and it is having a major share. From last 32 years, it is associated with PepsiCo, and you can see all these regions marked in blue are there. Basically area where the sub-territories, we build India sub-territories, again, international territories and Nepal, Sink and all that. And over the years, the sales volume is almost CAGR of 17% from 2019 to 2023. Okay. Also, guys, understand what is the product-wise breakup of Varun Beverages. If you talk about product-wise breakup, carbonated soft drink, that is a Pepsi, is almost 68%. Packaged drinking water, that is Aquafina, is almost 27%. And juice-based drinks is almost 5%. So major is the carbonated soft drinks. Again, if you talk about which are the main products in that carbonated, Mountain Dew is almost 47%. Pepsi is 22%. So yes, Mountain Dew is actually selling more than Pepsi. Mirinda is 17%. 7-Up is 10%, and 4% are others. Again, as I told you, the India is almost 78% of their total revenue, and 21.9% is from the other territories. Again, talking about what are the various products. So, as I told you, Pepsi, Mountain Dew, Mirinda, 7-Up, okay, energy drinks are there, club soda, carbonated juice-based drinks, Tropicana, that is nothing but the juices and all that. Again, sports drinks are there. And a packaged water is nothing but the main product is that Aquafina and Aquavis. Again, dairy-based beverages also they started, okay, and they have various flavors in that also. These are brand license of Varun Beverages. Also, guys, as I told you that they have a very good collaboration with PepsiCo. It's almost a 32 years of association. So VBL demand delivery, how they are actually providing the demand and all that, catering the demand. They have a production facility, sales and distribution, inlet, management, customer push management, everything at the demand delivery base. Again, demand creation may they have a trademark formulation through concentrated. You know that no, all these beverages are happen through the concentrate. Again, product and packaging innovation through investment R&D and customer pool management, brand development and all that. No ads and everything. So everything is actually correlated to the franchise, and they have a upper hand when you talk about franchises across the world for PepsiCo. Yes, Varun Beverages is number one. Also, guys, how they are actually catering across India and across world. So they have a manufacturing. It's a key player in the beverage industry. So what is the business model? If you talk about, it's a manufacturing concentrate, uh, basically PepsiCo, again, other raw material and bottling. So 40 state of our production, 34 in India and 6 international territories across distribution network. They have 120 plus depot, 2400 plus primary distributor, 2500 plus owned vehicles. They have a complete distribution model. Again, customer management. Correct. I'm not going into deep, but just to show you, you can read it if you want. Again, in market execution, everything is there. Again, part to pay reaching out every 6% in the world. Again, cost effectiveness, product optimization, and they have a very good backward integration also. 3 exclusive plus 10 integrated plant. Okay, innovation, packaging, etc. And in cash management, working capital facilities, discipline, capex management, and territory acquisition. So they have everything. They have a solid infrastructures, robust supply chain, demand delivery, market share gains, margin expansion, and ROE expansion, future growth. Everything is controlled through all these things. And this is how the moat of a company is. A good moat of a company is nothing but no where it is being safeguarded from any type of competition, and we can win still any big competition. And that is where one beverage is very good, because at every level, like at manufacturing, they are good, solid infrastructure, distribution, robust supply chain, customer management, demand delivery, in market of execution, market share gains, cost effectiveness, margin expansion, and cash management, ROE expansion, future growth. This is how they are expanding their business. This is what you have to see when you are analyzing a stock. This type of good mood is always positive for a company. Now, what we'll do, let us understand how the company has performed. And talking about that, let us talk about that. And just a minute. Sorry, guys. So, talking about that, if you go here, now Varun Beverages, you see the only problem with the Varun Beverages is that the stock P is almost 91.5. The P ratio is quite high. Book value is 53.4, and overall ROC is around 27.8. Now, when we talk about P ratio actually over the year it has gone down, then again it has gone up, but you can see the EPS accord with that is going up. So that is a positive thing. That is a big positive which is happening with Varun Wages, where EPS is going up, and that's why P ratio has a little bit gone down. But now again it has gone to 95, 91 now, which is on a higher side. That is what you have to keep in mind always. EV by EBITDA is also quite on a higher side. So it's an expensive stock, no doubt about that. No doubt about that. When we talk about no how the company has performed in the quarterly results and everything, see, the December quarter is always a seasonally weak quarter. So December 23, you can see 2,660, which is quite lower than other quarters. But you can see compared with December 2022, it is 2214. Okay, so even if you talk about net profit, last December 22, it was 82. Now it is 144. What I'm trying to convey is that December is a seasonally weak quarter for PepsiCo. And overall, if you see the sales growth is good, almost no over the year 37, quarter to quarter 13, 21, 20. So it's showing a good growth. Again, the profitability and all that, if you take year on year basis also, the directly if you talk about EPS also showing a very good growth, about 30%. So if you talk about compounded sales growth in last 10 years, it is almost 22%. 5 years, 26. 3 years, it is actually more, 35%. That's why current year it is almost 22%. Compounded profit growth is almost in last 3 years is 75%. Now, this is where you have to keep in mind. This company is consistently doing good in the recent quarters. And that is a good point. That is a good point we have to understand here, that it is showing a good profitability. Again, stock price, guys, in last 3 years, 84% CAGR rate they have grown. Extraordinary growth. Again, in 1 year also, it has grown by 113%. 5 years, almost 65%. That's why I'm telling you, this is one of the most consistent stock, and it is given a great return. Even if you see, ROE is also last 3 years is more than last 5 years and 10 years. These are all good sign. These are all good sign. Now you may say, Tapan, then what we should do from here? And here we have to see the valuation little bit. And first we have to see the outlook. Now, talking about the outlook, guys, if you see outlook currently, what the management said that VBL to maintain is earning momentum aided by increased penetration in acquiring territories in India and Africa. Again, the more and more territories they are going to acquire. Again, higher acceptance of newly launched products. So they are going to launch lot many products recent in coming times. Again, they are going to expansion in capacity and distribution reach. So they are going to expand in capacity and distribution reach, which will help you to reach to each and every citizen of India and also, across the world. Again, going refrigeration in rural and semi-rural area, scale up in international operation. Not only these four territories outside India we are talking about, over and above Africa and many other countries also they are going to reach. Again, highest interest growth led by an increase in debt. So, will partly offset the increase in earnings. So, they, because they are doing a good amount of capex, that is why the interest rate may go up, and as a result, the earning will be subdued because of that. But overall, earnings will be much much better. That is what the outlook look like. Even if you talk about the management, what they are saying is that peak season this year will be stronger as its capacity by 45% versus 2022 level. Now, this is what you have to understand. December was the weak quarter, but the next quarter during the summer season, there is always a pull back in the drink sales and all that. No, that will be much better. The peak season also leads to higher scale of small packs, leading to better realization per case. So they are selling small cases of small Pepsi bottle and all that. No, and other drinks, that is always per unit level. No, they will give you a much better profitability. Again, management expects huge growth in juice and value-added dairy as the capacity has tripled. Now they almost triple that capacity in current year 2024 estimates compared to 23 for Tropicana, Gatorade, and value-added drinks, dairy. So basically, they have tripled their, you can say, their capacity, which is also helping them. Plus, EBITDA margin guidance is between 20 to 21%, which is quite healthy. While the current levels are higher than this, management has given a conservative guidance due to geopolitical issues, increasing freight rate, and less predictability of commodity costs as sugar. So even though the management is quite conservative, but things look like the prospects looks much much better, and EBITDA guidance of 2021 is good, very good. Again, debt, they are saying that debt already picked up a lot, and the BV company acquisition amount to 13,000 million is not a challenge to the debt level, as it can be covered into 2 to 3 months in the cash profits in the peak season. So whatever debt they have, they are going to easily repay that, and also the interest cost, and they have a much much better position at a cash level. So that is a good sign for a company. Now, when we talk about various ratios, this was the outlook. Outlook looks much more optimistic. So when we talk about the ratios, guys, you see that a current in 18 it was 2.3, which has gone to almost 19 point, and every year it is giving almost 30% jump in EPS. Even if we take around a 25-30% jump in EPS next year, that is a full possibility that it may happen. Again, if you see the price to book value has gone up, but there's the company is performing a lot. Okay. Again, P ratio, of course, if you talk about the current year, I USD 90, but yes, over the years, if we take 60, 65 as an average also, and we get 30% EPS, then also it will give you a decent amount of jump from this price also. So P ratio is on a high level, but company is performing, so that is not a problem. Price to book value is on a higher side. EV by EBITDA is also on a higher side, but this company is performing. That's why enterprise value is on a higher side. ROE, you can see here over the years, it has done very well from 15.5, it has gone to almost 34.2 to 21.9. ROC is also around 21 average, which is a very good. ROIC is around 23. Now you may tell Tapan, then what to do? What do you think about this stock? Talking about this stock, guy, as I told you, the if EPS is going up by almost 30 odd percent, okay, and if you talk about the P ratio, like currently it is 90, but average you take 60 also. Then also, I think here from here also it will give you a decent return over the years, consistent return, and that is what you have to keep in mind for Varun Beverages. Varun Beverages is known for their consistent return, and that is what I think about this stock. Looking at the process, looking at the future expansion plan, looking at the opportunity available for this company is very well placed in this market, and they have one type of monopoly business along with the good moat. And that is why I'll always give a better P ratio to this type of company where it is giving a consistent return. Market will always give a better P ratio when the company is doing consistently well. That is what you have to keep in mind. And that's why at 60, 55, 60, 65 PE also, if you give and having a 30% jump in EPS, I think decent return is available from here. So if you are holding a stock, guys, keep it holding, no need to sell. And at every dip, this is a stock now. If you want, you can buy for future also. So this is what my take was for the Varun Beverages. Hope you like this video. Hope you like the understanding how to analyze a stock. And this is how we normally analyze a stock. So if you want to learn how to do it, the link is given below. You can attend our masterclass, which we are doing every week. There you will be able to understand how to do it. And do like and share this video and put in the comment box if you want any other stock to be analyzed. I'll always take into consideration. So guys, thank you very much for joining, and I see you in the next video. Bye then. Bye bye.